Everybody on this app wants to talk about how minimizing your taxes should be the number one thing that you're trying to do as a business owner, as a CEO of a seven-figure business. And I don't hear enough people talking about the negative impacts that can have on the overall financial system and landscape of your business. And this is kind of one of those situations, if you've ever thought about wishing on a star, you have to be very careful how you wish, because you could wish for $1 million and then somebody that you love could pass, and that's how you get your $1 million. So trying to minimize your taxes without really thinking of the overall overarching financial strategy of your business can be a lot like that. Okay, Megan, so what do you mean? How could that be? Well, for example, if you have a seven-figure business that is generating you multiple six figures of profit, but then you take that business and you make aggressive deductions, especially around things like vehicles and travel and things of that are really discretionary, but you can derive some personal benefit from it. What can happen is that you're going to make it harder to get lending. And I've seen it come up where business owners are unable to get lending on things that they want or need because they were really aggressive with their tax strategy. And when they submit those tax returns to the lender says you don't have the income to support this, and they won't lend them the money, even though there may be cash or cash reserves there. And another way that this can really bite you in the behind is if you're trying to build a business to sell, the valuation of that business is going to be generated off a lot of data points. And if you've gotten really aggressive with discretionary spending, and discretionary spending is the spending that is nice to have, but you don't actually need to run your business, then it can make the business look less profitable. And whoever is buying the business from you, if they have a really savvy negotiator on hand, they can negotiate a lower selling point. Whereas if you just had left those discretionary spending items alone, not done them, whatever, then you would in the future get more money in the long run from the sale of your business. And where another way that I see a lot of business owners mess this up is they spend money in order to get the tax benefit from it, but they don't realize that they're spending more of their cash on these things that they're buying than they're deriving from a tax benefit. So you have to be really careful with that. And if all of this is making your eyes glaze over, just know that if you're a high multiple six or seven figure earner, you really need to be working with an accountant who knows and understands what you're trying to do with your business, so they can give you actionable things to do to move the needle forward, and give you options and let you know what the pros and cons are. If this is something that's missing in your business, I just know that you're feeling it in your gut. So just head to the top of my page. You can come to my cash flow intensive webinar at the end of the week, and we're going to be discussing cash flow and how to increase that. And no matter where you are in your business, it's a really good class for you to have an understanding of how your decisions impact your cash flow. And it gets you on my email list where we can correspond and you can get tips and tricks from me delivered right to your inbox.